Sustainable debt for sustainable growth. That's the theme of a high-level conference in Paris that's brought together dozens of finance ministers and central bank governors, including the head of the International Monetary Fund. The world's debt is hovering at record levels in both developed and emerging market economies. Last year, it hit more than $240 trillion, or about triple the size of the global economy. The IMF says nearly half of low-income countries are in debt distress or struggling with high-risk debt. That's more than double the 21% figure recorded 6 years ago. And the French Finance Minister Bruno Le Maire has urged wealthy countries to act responsibly, calling for more transparency on the terms of the loans awarded to developing economies.
When there is a case of debt burden, this can lead to the enslavement of a certain number of states and governments which find themselves unable to clear their debt. When they are no longer able to pay back their financial dues, this enslavement can bring some states to let go of the control of critical infrastructure or their primary resources. It is therefore the state sovereignty which is at stake when developing countries fall in debt.
And TRT World's editor at Large, Craig Copetas, joins us now from Paris. Hi, Craig. Just listening to the French finance minister there, it really does sound like he was directing his remarks at China. Was Beijing the elephant in this room?
No, there's nothing like the global debt roadshow to start a day, Oscar. You know, it's like the Rolling Stones tour. You know, it just goes on and on and on and on with the same songs. The bottom line question is, who do you want to be in debt to, Oscar? The Chinese Communist Party or Wall Street? That's what it boils down to. Once a country has answered that question, they have to figure out if they can sustain the debt that is being imposed upon them. And if they can't pay that debt off, under whose rules and regulations will the bankruptcy, if you will, take place.
That's right, and we've seen an example of this so-called bankruptcy in Sri Lanka where the country wasn't able to repay China its debts and therefore handed control of one of the key ports of the country. But
Right.
Is China the only country that's guilty of behaving in this way?
Pretty much. Some could argue that, you know, Wall Street's lenders are acting in the same way. But the other big lender here, of course, is the International Monetary Fund. And, you know, with Christine Lagarde, who is kind of the Mick Jagger of the rolling debt tour. And the IMF likes imposing the harshest possible price on default nations that, you know, can't pay back the money. Most of these loans, whether they're from China or the IMF or whomever, are known as rater loans because they have high interest. And the issue in this is that the lenders know the people they're lending the money to come with a high default risk. So the lender never accepts any responsibility for this. Now, there's a growing chorus, which has been going on for a number of years, Oscar, but you don't hear much of it. It's called the doctrine of odious debt, which means if a country cannot repay the debt, you cancel the debt. That recreates a solvability within the debtor countries, and it kind of throws out the well-worn notion that how much you can pay back depends on your GDP, as Nobel laureate Joseph Stiglitz, you know, has argued. The GDP only focuses on the production of goods. It's not a good measure of economic performance. It's not a measure of well-being, and that's really what it's come down to in these debtor nations, a measure of well-being.
And as this Paris forum was taking place, the EC came out and warned that Italy's huge debt pile is expected to grow even further this year. Italy, of course, has just signed on to China's Belt and Road Initiative. Do you think the finance chiefs in Paris are worried about what's to come on that front?
Well, they have to be. The other curious thing about debt, Oscar, it's I don't know, I guess you could call it a hereditary disease. Once you go into debt, it's really hard to get out of debt. And that's the situation that Italy is in right now.
Okay, Craig Copetas, we'll have to leave it there, but thanks again from Paris.